Okay, good morning, everyone. Thank you for joining me for today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you all today. So today, we're going to go through a number of things. We're going to start by reviewing yesterday's ECB press conference, go through some of the key things that were communicated from the conference, and of course, review how the EURUSD is moving after that conference. Then we shall also go through the other markets, the commodities markets. We shall go over the metals and also sum it up with the indices. Additionally, we are also going to review Netflix and see how Netflix has helped the Nasdaq to rally. That's post earnings. Yesterday, we had the ECB conference, and of course, we had the third interest rate cut by the ECB, which of course was yesterday. They cut the interest rate from about 3.6% to about 3.45%. And of course, that cut was delivered yesterday by the Guard. So as you can see in the rates, we've had 3 interest rate cuts. First one was on the 31st of May. You'll be seeing my screen in a moment. All right, so the first rate cut we got it on the 31st of May, and we'll be able to see on the charts what happened right after we got that cut. Then we got another one on the 31st of August, and then of course now we got another cut that was on the 17th of October. Now, some of the main things we got from the conference that we had with Lagarde, first thing is that she has not, or the governing council has not yet indicated what policy path they are on exactly, which of course is typical of central bank language. They don't typically tell you exactly what path they are on. We've seen it happening with the Fed, we have seen it with Bank of Japan, and now we're also seeing the same thing with ECB. Despite us having 3 interest rate cuts to ideally tell us that they are now on a path to normalize rates lower, Lagarde indicated yesterday in the conference that they are not yet there's no question that they are restrictive. She mentioned that, but also they said that they have not chosen what exact policy path they are on, okay? Which means that they could turn restrictive or they could normalize the interest rates lower. But so far, since we have got 3 interest rate cuts since the year began, it's without a doubt that the ECB wants to normalize interest rates lower. The other thing, of course, that we got from the ECB conference was that Lagarde mentioned that Eurozone is not in a recession. And of course, that allowed us to see a relatively stronger EURUSD. And at the moment, EURUSD is holding its price action relatively bullish, as we'll be able to see on the charts. Third thing we're able to also see is that Lagarde indicated that there is still a risk of inflation moving higher. And they say that they want to keep the policy relatively restrictive so that they can tame inflation and, of course, meet one of their key mandates, which is price stability. Now, looking at the calendars for today, we don't really have a lot of market moving news aside from a series of Fed speakers. We have Fed Bostic, who is typically a hawk on the committee. We also have Fed Waller, who is usually also a hawk. And of course, these speeches are most likely going to enable us to see a stronger euro, a stronger dollar later in the day. Now, at 2:30 a.m., we got some data coming out from Bank of Japan, which is the inflation, rather from their labor agency, and they indicated that inflation actually declined, which of course might be one of the reasons for Japan for Bank of Japan to stay steady with wanting to hike rates. The reason they would want to do that is that they want inflation to steadily get back to their longer-term target. Now, coming to the EURUSD to see how it has performed post every rate cut. The first rate cut we got from the ECB, that was the 31st of May. This is typically how it performed. Soon after we got that rate cut, we saw the ECB rallying. We saw the EURUSD rallying slightly, 0.5%, and of course, after moving higher, we then saw it moving to the downside. That was a move of about 2.3%. Fast forward to the next rate cut we got, which was on the 30th of August. This is how the euro performed. We saw a slight move, down, and then after that we saw it moving higher. But this particular crash that we saw from the euro was not because of the rate cut that we got. This particular crash was attributed to the inflation data we got from Germany, but we also had some along this crash. Also, we had the NFP number for September, which of course was bullish for the dollar, and as a resultant effect, it affected us, and we were able to see the euro moving lower. Now, since I'm on the euro, I also want to talk about how the euro performed during previous election cycle, from the previous election cycle. Now, the last time we had the inflation in the US, this is how the euro performed. We typically saw a sharp drop that happened. That was between the 27th of October to around the 4th of November. The euro fell from 1.18673 to about 1.16222. Now, take note that 2020 and 2021 are very similar months, okay? Very similar periods. Aside from the pandemic, 2020 is an exact replica of 2024, okay? If you look at the policies that the central banks are having, the switch in terms of the way inflation is, we are seeing that the dynamics are more or less the same. Now, in terms of how the euro performed, before the election, it made a top, which is at 1.18, and then we saw it crashing all the way to about 1.16. That was in November. Then soon after the election, rather before the election, the euro launched a rally that took it up about 6%, and by January, euro USD was trading at about 1.23. Okay, now the question is it possible that the same is going to happen going into November? Okay, so that's now up to you guys to see. And of course, gauging some of the remarks that the ECB governing chair made, no commitment to specific policy path. She said, I don't see recession in the Eurozone. And then she also added there that there is no question that we are currently restrictive. Now, all the remarks that Lagarde mentioned from the ECB conference yesterday were bullish for the euro, okay? The only reason why the euro is struggling to buy is largely because of the DXY. DXY is looking very, very bullish at the moment. The retail sales number we got yesterday did little to sell the DXY. The jobless claims numbers also came in weaker yesterday. To put it just in simple terms, that there seems to be so much that is supporting a strong dollar. Now, when we look at it in terms of positioning, retail and institutional positioning, right now, traders and institutions are net short on the dollar. However, because the dollar is a reserve currency, and also because the money market instruments are doing well, we saw the US 10-year is currently trading at about 4.1%, its highest point in quite some time. We are also seeing people flocking to money market assets right now as a safe haven, especially since we are going into a very tricky period, which is the US election. Now, we're not too certain what's going to happen with the dollar. If I look at the DXY on the H4 time frame, I see some signs of weakness. I would not want to say that I would not want to call a top for the DXY as yet, especially since we have, we still have some time between now and November for us to see how the dollar evolves. But there seems to be a lower high in the making. Okay, there seems to be a lower high in the making. Between now and possibly November, we could see the dollar starting to switch to trade lower. Okay, but there's so much data that we are having that is typically making it tricky for the dollar to sell. You're having very strong retail sales numbers. You're having very, very strong jobs numbers. The weekly jobless claims are on a steady downtrend. All these metrics are essentially providing what we can see as a very, very strong US dollar. And that, of course, is an impediment to any gains we are seeing on the euro. and even on the pound. Yeah. So going over to ING to see what the ING team has over here. So they're saying Christine Lagarde's comments at today's European Central Bank press conference suggests the bank is trying to get interest rates down to neutral levels as soon as possible. Definitely. So it's like they are doing something, but it's like they are not doing something. Okay, so it's like they're leaving us in a bit of limbo, which is typical of central banks. The guidance is vague. They give vague guidance. Clearly, you can see how the interest rate path is for the ECB. We are seeing the interest rates are declining, definitely. But when you come and see what Lagarde mentions during the conference, she's saying that we have not yet decided which path we are going to take. So they are leaving it up to us to decide that on our own. So they go ahead to say that decoding the ECB's language. Of course, during the press conference, Ms. Lagarde argued that today's rate cut decisions were in no way a deviation from a data dependency strategy. Obviously, again, they said they're staying data dependent, waiting to see how data evolves for them to decide on which direction to take. But again, we have 3 rate cuts in so far for the year. So without a doubt, they are definitely trying to normalize rates to lower levels. Still, some doubts remaining. In fact, as the drop in headline inflation had been expected, it was only the weaker than expected PMIs which seem to have driven the ECB's decision to cut rates today. No words about potential changes to still very benign growth profile in the September forecast. Again, she didn't really comment on growth, and she indicated that the ECB is unlikely to get into recession, which of course came as a good thing for the euro. The only reason why we are seeing EURUSD trading comfortably at these levels is simply because of those good remarks we got from the governing council chair, Christine Lagarde. So going ahead, she mentioned to some extent we are currently witnessing an interesting back and forth of the ECB's main focus from actual data to forecasts and back, while the run-up to the first 2 rate cuts in June and September basically dominated by the ECB's growing confidence in its own stable longer-term inflation forecasts. Today's rate cut is driven by actual data developments and a shift from inflation concerns to growth concerns. Following this logic, as long as there are no signs of a significant rebound of the Eurozone economy or reflation, the ECB will continue cutting rates. Now, it's going to be a battle for EURUSD traders. It's now a battle between the euro and the dollar. Which of the 2 central banks is going to cut faster than the other? Okay, just from where I'm seated, I can see that the ECB might be a little dovish, a little less hawkish than the Fed, which could benefit the euro between now and possibly January. We could see it starting to trend higher. Okay, now crossing over to Netflix. Netflix reported very strong earnings in line with expectations, and it's currently trading up about 5% in the pre-market after hours. And of course, looking at the shareholders letter, the letter to shareholders by management of Netflix, this is what was indicated here. They said in Q3, revenue grew by 15% year over year, and operating margin was 30% versus 22%. Then, of course, they indicated that they released a number of very nice series that performed quite well, like Emily in Paris, Cobra Kai. They also made a remake of the very, very nice Beverly Hills Cop. I'm sure some of you people must be knowing about that one with Eddie Murphy. Now, the other thing, of course, that I also saw from this letter is that they also have a number of shows that are coming up later in the year, like Squid Game season 2 is going to be coming out, and they are also going to have the Mike Tyson and Jake Paul fight, which of course is going to be sponsored by HBO and Netflix and a few other companies. So going into 2025, I believe Netflix is on a path to have very much stronger earnings. Subscribers definitely are going to come in from these new shows that they are also going to be coming up with the end of the year. The other thing, of course, that they indicated in this is that they want to make a product fit for the APAC region, which of course is the Asia Pacific region, and there are a number of shows that are going to be put on Netflix that are going to be able to drive up revenue which of course the subscriber growth is a major contributor to their bottom line. That's subscriber growth. And by having shows in Korea and Thailand and India, it's definitely a good thing for them, because they'll be able to get more people subscribing for Netflix. Yeah, so it's a very, very strong report by Netflix. You can find it online and be able to read through it. And of course, the stock is trading higher. It's up about 5%. And I believe this will definitely push the NASDAQ to higher levels when the market opens. All right. Now, crossing over to the MT5. Rather, before I cross over to the MT5, I just want to go over gold. So gold yesterday was able to break deadlock and to trade above 2,700. Gold has been in a nice steady uptrend since I think the start of the year. Gold is up over more than 50%, you know, slightly less than 50% on the expectations of rate cuts, and of course the expectations that we should see. There's uncertainty around the US election, plus also the conflict between Iran and Israel. So from the previous snapshots, I indicated to you that there was going to be a very strong buying momentum for gold within this demand zone. And if anyone has been buying gold, I believe gold has allowed us to buy from this demand zone very nicely. We saw slight dips below here where we saw a grab on liquidity. There's also a very big order block that is supporting gold here between 2,600, 2,624, which was attracting a lot of buyers. Now, at the moment, gold seems to have tapped out a bit and could possibly retrace to trade back to this demand zone. But the structure still says quite bullish, and I believe that we could mostly see gold trading. So the general trend for gold, if you arrange your chart properly like how I've done, you'll notice that gold has been having accumulation, breakout, accumulation, breakout, accumulation, breakout. So that's typically how it has been trading. So now the best way for you to trade it would ideally be to look for areas where gold has been stopping before pushing into a new trend to trade higher. Now, let's cross over to the MT5 to see what other charts we have that we can go over. So I'm going to start it off with Bitcoin. So when you cross over to Bitcoin, Bitcoin is currently trading bullish, slightly below that 670,000 deadlock level where it may aim to trade. Once, of course, Bitcoin crosses into 70,000, it's going to launch a rally that could possibly take it trading towards 80,000. Okay, and I'm just keeping an eye to see what comes out of Bitcoin there. But we are looking very, very bullish, and this bullish momentum could stay for Bitcoin towards that level of 70,000. Now, crossing over to the Dow Jones. Dow Jones right now has a bullish structure. We also had a grab on liquidity along these areas here, and it has held it and supported it to trade higher. There are a number of companies that reported very strong earnings for the Dow Jones. JP Morgan, it was an earnings beat for them. Wells Fargo, earnings beat for them. We have a number of companies that are also releasing earnings today that could possibly help the Dow Jones. But the structure for this pair is very strong bullish. And the idea with it is that we could ideally expect this momentum to stay. So there was an order block here, and of course a grab on liquidity there, very strong imbalance candle there that held price action within here. So again, the sell was placed there, but ideally didn't work out for obvious reasons. The bullish momentum is very intact on this asset, and we could see it trading higher. Possibly it could even aim to trade at 44,000 at the end of the earnings cycle. Now, NASDAQ is trading higher. That was after the earnings we got from Netflix. It's currently trading up about 100 points from yesterday. And I believe today NASDAQ is going to make an attempt at 20,500. Okay. When the market opens today, there should be a spike on the NASDAQ that's going to take it to trade towards 20,600. We are looking at a very strong bullish structure for this asset, and I believe there is very little that's going to stop NASDAQ from moving to higher levels. So you need to position yourselves for a buy on this particular pair. Gold, I think we've discussed gold. We had a very nice asymmetrical triangle on gold. Yesterday, when we met for the snapshot, I believe yesterday, but one rather, I provided buys for gold, obviously, because it was trading above its 50-day moving average. But also, we had a very nice setup here for an asymmetrical breakout for gold. So we saw the market breaking out there very nicely and trading upwards of 2,700. Now, GBP/USD. GBP/USD is currently trading slightly below its demand zone on a 4-hour time frame. I'm expecting GBP/USD, for us to see GBP/USD to make a retracement to trade higher between now and the start of November. That could launch it trading up to 1.43, rather 1.34 or 1.37. Now, the buyers for GBP/USD are starting to come in at this point. If there is little data-wise that's going to stop the pound from selling, it's going to buy, okay? And I don't see us having negative data for the pound. Most likely, what is going to stop it from buying is likely going to be things like possibly we might get stronger data from the dollar for the dollar. If we do get strong data for the dollar, it's going to be a very strong barrier for the pound to move to higher levels. However, again, if institutions start cutting back on their dollar bets short term, then that should help the pound to recover very nicely. We have different areas of structure to break, like here. Once you break this structure here, then we have to enter 1.31. Once we do enter 1.31, then of course we need to break structure here to enter 1.32. So we have a lot of levels for us to trade towards. But I'm going to stay bullish on a pound because I see no reason for us to, especially swing trading. Day trading, there might be some hesitation there, but swing trading, definitely comfortable buys on a pound. You don't have to worry about them, and just hold tight and see how it moves. Now, EURUSD, of course, this is what we discussed on Wednesday. I told you that we could potentially see a move lower into the ECB, which of course we did. Having some hesitation at those levels there, and the buying should start for it to trade towards higher levels. So there is an order block here for the euro that you also need to take note of. So this order block here is going to help the euro to stay at this level for it to hold price action before moving to higher levels. So just keep an eye there. That's what we can expect there for the euro. So that's it, guys. So if you have any questions, you can kindly send in your questions and we can go over them. So for GBP, for USD card is bullish, and of course we just have to wait and see the kind of price action you get there, moving higher. Still looking relatively bullish, and of course the reason why we are seeing, of course, when we met on Wednesday, I indicated to you that that we're having some hesitation here, so we could expect either move down or move up. And of course, since we're above the 50-day moving average there for USD card, the price action might maintain within this zone before trading to higher levels. Awesome. So you can send in your questions, guys. Euro JPY, I don't have the Euro JPY chart. I'll have to revert back to you on Monday, rather on Wednesday with that. Again, guys, usually if I'm to give you something thorough, I need to go over the chart, sit down, go over it, and get proper analysis. If I go over it now, I might give you something that's not concrete. Yeah. So let me get back to you, Collins, on that when we meet on Wednesday. Now for USD JPY, this is currently where we are trading at the moment. The move higher is obvious. Again, like we met on Wednesday, I indicated to you that once we break structure here, we could expect a move towards 150. So we are trading in 150 now, and I'm expecting there's going to be a peak very soon for Euro JPY. Okay, let me just share my chart in a moment. So there's going to be a peak very soon for USD JPY. When the peak is created, then we should see a downtrend coming in. We should see a downtrend coming in there for price to trade lower towards 142, 143. But for now, it's a choppy uptrend. Yeah. Then we also got some remarks from the Bank of Japan. One of the Bank of Japan officials who indicated that Bank of Japan is going to go steady with rate cuts. They are going to move slowly. So that is bearish for the yen. Okay. The reason why we have reached 150 and the idea with the trade I provided on Wednesday for us to buy USD JPY was that was because of these comments he got from the bank governor. He indicated, one of the bank governors, they indicated that that they might go steady or might go slow when cutting rates. Okay, yeah. So that's it for USD JPY. So we should see a steady uptrend here from there. Guys, GPP card, again, you might need to wait for me to go over it. Again, guys, analysis takes time. You know, when you give a pair like GPP card, I need to go to it, you know, go over it, see what is possible on it. So I'll have to revert to you on that one now on Wednesday. Hi, how is that EU looks bullish while GE looks bearish as we speak? Yeah, that is a very complex question to answer. Yeah, it cannot move exactly perfect. Okay, guys, we've been led to believe that these assets are completely 100% positively correlated. That's not true. Okay, that's not true. They are not. That's why ICT traders, you have this thing you call SMT divergence, where we'll typically try to trade rebounds on a pair that most times, or may say 80% of the time, follows another pair. So if one is bullish and one is bearish, it could be for reasons that maybe you'll never know. Okay, it could be order flow. Okay, because the currency market is moved by the institutions. So if, for instance, maybe for a particular point in time, the institutions are heaping up on maybe euro swaps, okay, buy swaps, or maybe euro swap or on euro sell swaps, that could affect the price action within that time. Now, I don't think GBP USD though is bearish. I wouldn't want to say it's bearish because we already bought off. We bought off 1.30. So at the moment, actually, it's looking slightly bullish, I would say. Okay, because we bought off this zone yesterday. Maybe it sold a little bit. Maybe that's what you're saying. It just dipped a little bit from that peak it had in the morning. But it's looking a bit bullish, especially from these levels here. Yeah, we are waiting for it to break that level of structure. And of course, once it breaks it, then we could possibly see a rally from those levels to trade higher. So at the moment, it's just really a wait and see. Wait and see how it manages there, okay? And whether it will be able to break structure there. Awesome. Next question. Yeah, so let me just generalize for the JPY pairs. The JPY pairs are bullish. Okay, let me just generalize for you. If you're trading JPY, bullish. Okay, we are bullish on USD JPY, bullish on GBP JPY. All those we are bullish on them. Okay, yeah, because of the remarks from the Bank of Japan official. Yeah. Awesome. Guys, thank you so much for joining me for today's market snapshot. And I hope to see you guys next week. Make sure you trade safely. We do not have a lot of events later in the day. So don't really be overzealous with your positions. Take your trading one step at a time. Price action may be a little bit slow, especially since the US session has a couple of speakers, but they might decline to comment on anything economic or monetary related. Yeah, so just take note of that. Awesome. Cheers, guys, and let's meet again next week on Wednesday. Cheers.